Many people are asking me, Martins, if I am always investing my extra cash every month, how on earth will I have money left over to buy the dip when the big crash actually happens? Go nowhere. I will tell you how to make a financial decision that will make you rich. Wake up. Listen carefully. This is your greatest opportunity. Right now, everyone is panicking about a stock market crash in 2026. People are asking, is the US dollar going to collapse? Or will the AI job market leave me broke? But let me tell you a secret the top 1% don't want you to know. Economic downturns and market panics are the absolute best times for wealth creation. Look, I know why you are here. You are tired of 30-minute videos packed with endless fluff, ancient history lessons, and creators trying to sell you a $700 course at the end. We don't do that here. On Wealth Empire TV. Today, I am giving you the exact direct breakdown of the best way to invest money in 2026 so you can achieve true financial freedom. We are going to tackle the real issues. How to keep cash ready for a market crash without missing daily gains. How to survive financial repression. And how to protect your income from AI. Before we dive in, hit that subscribe button. We are a growing empire of 43 visionary investors right now, and by subscribing today, you are anchoring your seat at the table before the rest of the world wakes up. Smash the like button, and let's get straight to the point.
Oh no, the market is crashing, just like 1929!
Sam, breathe. Let's look at the data.
But the dot-com bubble, it's happening again!
History doesn't repeat itself exactly. To understand financial education and money management, we have to look at how technology shifts wealth. This is Sam. Sam is paralyzed because every financial headline makes it look like the world is ending. But history doesn't repeat, it rhymes. Every time humanity invents a tool that changes how we live, the market creates a massive bubble. The bubble pops, people panic, and they sell everything out of fear. But guess what? After the 1929 crash, the modern industrial economy was born. After the dot-com crash, Amazon, Apple, and Google took over the world. When emotional investors panic and sell, they create a massive discount sale for those who possess financial literacy. A stock market crash in 2026 isn't something to fear. It is the biggest wealth opportunity of our generation if you have the right investing strategy.
Section 3. Solving the dry powder dilemma. This section explores strategies for timely capital deployment.
This portfolio makes no sense. ABP says buy, but the dip sign says wait. Ugh, I give up! What am I supposed to do?
This brings us to our first major problem. The dry powder dilemma. Meet Tony. Tony watches standard financial videos and is completely confused. He's told to use the ABB strategy, always be buying to dollar cost average into the market. But then, he's also told to keep heavy cash aside to buy the big crash. Tony is asking, Martins, if I am always investing my extra cash every month, how on earth will I have money left over to buy the dip when the big crash actually happens? Right now, I'm all in, and my money is locked up.
This pie chart displays a balanced portfolio strategy. 70% is in core investments like stocks and real estate. 20% is held in a safe haven assets like gold and Bitcoin.
Tony, here is your solution on Wealth Empire TV, the Strategic Cash Reserve Framework. You do not choose between investing and saving, you do both systematically. You automate your daily or monthly long-term investing using 70% of your investment capital into stable value-producing assets. But you strictly divert 20% of your capital into a high-yield savings account or short-term liquid fund. This is your dry powder. You do not touch it during normal market cycles. You let it sit there until the market experiences what I call the POOP method. Panic, overselling, opportunity, and profit. When the market enters a state of panic and high-quality assets drop by 20% or 30%, you deploy that reserve dry powder. That is how you master portfolio strategy without running out of cash. Now let's talk about the macroeconomic dark cloud making everyone anxious. The global debt crisis and the threat of currency devaluation. With the US facing a staggering 39 trillion national debt, the government is caught in a trap. To handle these massive interest payments, they engage in what economists call financial repression. Financial repression is when the government deliberately keeps interest rates lower than the actual rate of inflation. This is a silent tax. It means if your money is just sitting in a traditional bank account, the government is effectively raiding your savings to inflate their own debt away. This is why people ask, is the US dollar going to collapse? While a total collapse is unlikely overnight, the US dollar strength is being systematically. You survive financial repression by shifting from a saver to an owner. Do not hold massive hoards of raw cash long-term. Instead, prioritize wealth creation by acquiring tangible, inflation-resistant assets, like blue-chip stocks and real estate that have the power to raise prices as inflation climbs. And what about investing in gold or crypto? Think of gold not as a fast growth engine, but as an insurance policy. Keep about 2% to 3% of your portfolio in gold or Bitcoin as a hedge against currency debasement and macro uncertainty, but put your main focus on assets that generate active value. Section 5. AI and Tech, Revolution or Job Deletion. Sam is looking at an AI software program on his computer, sweating, thinking his job is completely gone tomorrow. 70% to 80% of human jobs. He's thinking, Martins, how can I build wealth in an economic downturn if I don't even have a job or an income stream left to invest with? It's a valid fear. Unlike the Industrial Revolution, which replaced human muscle with tractors, AI is targeting human cognitive tasks. Many feel the current tech market is a manipulated bubble where retail investors are just picking up the tab for wealthy insiders. Here is the mindset shift you need for an AI economy. You cannot invest without an active income stream. Therefore, before you optimize your portfolio, you must AI-proof your career or business. Focus on deep human skills that algorithms cannot easily replicate. Complex problem-solving, emotional intelligence, leadership, and high-level negotiation. Secondly, don't just fear the technology. Own it. Use the best way to invest money in 2026 by allocating capital to companies that are building the core infrastructure of the future, rather than speculating on hyper-hyped meme tokens or volatile trends that have no underlying value. Turn the technological shift into your personal wealth engine. Show some love and smash the like button and subscribe to our channel, a place where we teach you how to actually be rich. When you subscribe, please let me know you've done them. Thanks.
How to AI-proof your income first. Tony is frozen trying to time the market. Analysis paralysis prevents action, leaving him stuck. AI-proof your income first.
This leads to severe analysis paralysis. Look at Tony again. He is completely frozen by investor psychology and mixed signals. One financial creator, 1929 market crash tomorrow.
Bull market, buy now!
It causes massive fatigue and total mistrust. Tony wants to know, how financially savvy do I actually need to be to know when a stock has officially stopped crashing so I can start buying?
Section 6. Overcoming analysis paralysis and timing the market. First, AI-proof your income. Then, use the value discount rule. Deploy cash tranches at a 20% correction and a 30% crash.
Listen to me closely. You do not need a Wall Street degree, and you do not need to perfectly time the bottom of a crash. Nobody can perfectly time the bottom. Instead of trying to catch a falling knife, use a psychological rule of thumb, the value discount rule. Identify high-quality, fundamentally sound businesses or broad market index funds. When the market panics and those quality assets drop by 20% from their recent highs, You deploy your first batch of strategic cash reserves. If it drops 30%, you deploy the next batch. You buy based on value discounts, not based on emotional headlines or trying to predict the exact turning point. Overcoming panic is the ultimate key to long-term investing. Building an empire requires clarity, execution, and master-level money management. Let's review your blueprint for how to build wealth in an economic downturn. 1. Build your strategic cash reserve so you always have dry powder ready. 2. Defeat financial repression by owning value-producing assets. 3. Protect your income by mastering high-value human skills. 4. Stop trying to time the market and buy quality assets at a systematic discount. We are building something incredibly special here on Wealth Empire TV, and every single one of you matters. I want to hear directly from you. Drop a lay. Comment right now and tell me, what is your biggest takeaway from today's video? Are you holding enough dry powder for 2026? Or are you currently stuck in analysis paralysis? I read and replied to every single comment. If you found real uninflated value in this video, do me a huge favor. Hit that subscribe button, turn on notifications, and share this video with one person who needs to clear the financial fog out of their head. Thank you for watching. Stay focused, stay disciplined, and keep building your empire. See you in the next video.